Good afternoon. Today is Wednesday, September the 6th. The time right now in Singapore is 16 minutes past noon. Overnight, there was hardly any drivers, but basically what we see was the US equity markets, basically the world equity markets continue to slide. And in the Dow Jones itself, as we can see on the chart here, this is the 4 hours micro E-mini Dow futures. Prices of the Dow continue to slide and is likely to continue to slide into the bracket in which I think the buyer may come back. That is 34,480 to 34,500 levels. And this is likely to be a corrective pullback, likely to see an extended rally beyond 35,167 over time. So this is the current sentiment in the marketplace. Now, tonight we have the release of the ISM Services PMI number, which is the Purchasing Managers Index, and this will be the main driver for tonight. Okay, and overnight we can see that in China we have the release of China's services PMI, which does not look good because it is beginning to slide back again, although it is still in positive territory at 51.7. But you can see that the market was not expecting such a poor number, so that has already damaged short-term market sentiment. Now, in the S&P 500 basis, the micro E-mini S&P 500 futures, we can see that the market is also pulling back, although it did not pull back as much as what we saw in the Dow. The high traded so far is 4,547 and 3/4, and this may see prices continue to slide perhaps to 4,456.5 levels. So do watch out for some kind of buying interest to return. They may cause this market to challenge the 4,547 and 3/4. But you can see that this month has been a little bit worrisome because September is a month that usually causes prices of equity markets to tank. So this month we have two major events. One is, of course, the FOMC meeting, which is going to be scheduled on the 19th to 20th. No change expected from the Fed in terms of interest rates. However, the one that we really want to keep our eyes on is the potential of a US government shutdown, because there is going to be another wrangling about the budget. The Republicans want to see that the Biden administration implements a series of spending cuts, but I think the Biden administration is not interested in cutting. So if there's no agreement come the end of the month, come October the 1st, the US government run the risk of a shutdown. So this could be the major event for this month itself. So keep your eyes open for negotiation as far as the budget is concerned. Now, over in the Nasdaq 100, we can see Nasdaq is on a relative basis very, very stable. The high traded on last Friday was 15,661.25. And although we do not see the kind of pullback like we saw in the Dow, but the market is still nonetheless vulnerable to a pullback. Immediate target is about 15,200 levels, so do watch out for any eventual move to the downside. And over in Asia, we can see that in Hong Kong, prices are backpedaling again. You can see the market high of 18,896 on Monday is beginning to lose its momentum. Right now, the market is trading at 18,281 levels. And this, of course, is the concern over Chinese economic performance. Like I said earlier on, yesterday's release of the Caixin Services PMI is not giving a lot of confidence that the Chinese economy is going to recover anytime soon, despite we have a series of micro stimulus package being put into effect. But I think it's a little bit too late in my opinion. So this could actually be negative for the Hang Seng market going into the rest of the month itself. Over in Nikkei, we can see Nikkei continue to edge higher, and we can see the market has already hit my target at 33,260. The high traded so far is 33,290, and we are only at the halfway mark for the day. So let's see whether the market can challenge 33,470, and if it does, whether it can close above that. I suspect that it may not be able to do so, and it is actually building up for a pullback, at least in a temporary basis. Let's see what happens going forward. And in the dollar itself, dollar remains very, very robust. We have a new high for the year at 104.85 overnight. You can see that the prices is already beyond the June high at 104.61, and this lay the background for further advances. But I think before it does that, maybe it will pull back first, because again, this June high is a pivot high, and we want to see whether the market can close above this on the daily closing basis. If it cannot and close back down again, that could actually cause the market to actually come down. And I would like to see a three-way pullback, ideally to 102.85 levels, before we make before I'll consider to go in to buy again. So basically right now at 104.85, it is not a good level to go in to buy. I would like to see a closing above this, but if it cannot do so and come back down on a close to close basis, I think the market is set to at least trace back to 102.85. So in the euro dollar, we are seeing something very similar. We can see that this morning we can see a low at 107.06, and this is despite the fact that the market is very, very weak and is getting just very, very close to my target price of 107. So we are missing that level by at least 0.5 points pips, and this is also laying the condition that if the market cannot go below and close below this level, it may run the risk of a counter trend rally to test a 109.50 levels. Similarly, in the sterling, we can see sterling has been going down, and the low traded yesterday was 125.28, and we need to see a market close below this level. If not, the market again run the risk of a counter trend rally to 127.45. In Aussie, we are almost there. I think the Aussie market is likely to edge a little bit lower, perhaps even to test the 0.63 levels. But if the market continue to slide, there is the potential of a dip to 0.62. But I think 0.63 is close enough on a relative basis to the other principal currency, because if the dollar started to pull back, that means there is a good chance the Aussie dollars may also recover. But top side is going to be a 65 cents level, as we have seen so far. And in the dollar versus the yen dollar yen has again traded to a new high at 147.80, and this is getting to be a little bit hairy. By and large, I still see some strength in the dollar versus the yen. In fact, the target has been moved to 150.71. Previously, I was mentioning 149, but let's see what happened, because there is the possibility the dollar yen may be on its own course to charge higher. Again, this morning, Japanese officials are already issuing a veil warning of further escalation in the fall in the yen, and they may, what it means is that they may at any time come in to intervene. So anything above 145 is a very, very heavy proposition to buy dollar versus the yen. So do watch out for that as well. In dollar Canadian, we can see dollar strength has been very visible, like what we saw in the dollar index. Dollar Canadian is at 136.70 overnight, and this is already marginally above the April high of 136.68. So it's one pip higher. So let's see again whether this is going to be a fake move or the market needs to close above 136.70 to be on the positive side. If not, the market run the risk of doing a pullback to perhaps challenge the 134.90 levels. Over in crude oil, this is a market that is on steroid right now. The market is at $88.07. On the back that the OPEC members, the biggest members of Saudi Arabia and Russia, part of the OPEC Plus consortium, has actually announced overnight that they are going to extend the production cut all the way to the end of the year. Now, remember earlier on in the middle of the year itself, Saudi Arabia and Russia has decided that they want to cut production on their own beyond the quota agreed among the OPEC members. And this is on a voluntary basis, and they have been talking about moving the production cut deadline to end of August, which they extend to end of September. And market talk is that they're going to extend it to October. So now it is beyond October, it's all the way until the end of the year. So this actually lit a fire under the price of crude oil, which saw a surge to $88.07. So this market right now is definitely on the loose, and immediate target is going to be somewhere around 88.77 cents. Let's see whether we get some kind of reaction here. I have a soft target at $92. Let's see what happens here. So the market, because there is this production cut all the way to the end of the year, market participant is beginning to shift the focus to the $100 per barrel target. So, but personally, I don't think it will do it so this month. This round, I think market is quite healthy to have a pullback first. And if we get a pullback to $82.80 or to even as low as $81.60, that will be a much better proposition to maintain the robustness of this rally here, because the market has been very, very bullish of late, and we need a little bit of releasing of pressure for it to be able to maintain its momentum. So a pullback is actually quite healthy in my opinion. So do look out for a pullback into this area of prices here to actually enable us to take up long position. In the precious metal, we can see dollar strength has actually finally caused the precious metal complex to actually pull back. The spot gold prices at 1,952, almost 953, has seen a pullback to 1,924 levels, and this is currently where we are right now. Now, this is the immediate support levels short term. I think there should be a bounce back to 1,939 to 1,942, and if we get a bounce and then no more beyond that, I think the market may do a three-wave pullback to perhaps challenge the 1,920, perhaps even 1,910 levels. So this will be my ultimate buying area. So this is an internal structure here. I do expect a bounce and then followed by another dip into 1,919. Over in silver, I'm seeing the same thing here. So far, the market has already pulled back into the primary target at $23.48 overnight, within the bracket of $23.29 to $23.62, which I have previously laid out as a potential area of buying. So I do expect some kind of bounce, and if we get a bounce back to $24.25 to $24.43, that will be another possibility of a larger degree pullback, and then we will see what happens after that. And over in Bitcoin, nothing really happens. Market continues to stabilize at about the 25,800 levels. So basically, the market has gone flat-lined. There is no incentive to either go long or go short. You can see market basically is not interested to take the market either way, especially after the slam down from 28,180 to 25,450 levels. So again, there is going to be very little interest in the crypto space. Even that can be seen in the Ethereum markets. You can see Ethereum have a high of 1,746, and it has gone down to as low as recently at 1,600. So we can see the market is basically not really having any incentive to go either way. So this is all I have for you for today. In the meantime, you take care. I'll come back to you tomorrow morning with another update. Bye-bye.